Boom. What's going on, guys? Cobra Trading here, and I wanted to do a tutorial today on candlesticks. And if you're just beginning, this is going to be the candlestick Bible of everything that you need to know to effectively be able to read a chart and be able to identify trends as well as trend reversal patterns. How are we going to do that? Let's dive right into the charts, and I'm going to show you right now. This is Bitcoin's chart. This is back in 2018 and stuff. And when we think of candlesticks, we think price action, right? Candlesticks are basically what make the price action visible to us on the chart. That's a known. But on a daily chart, for instance, every single one of these individual candlesticks represents one day. So when I refer to the session from here on out, that's what I'm going to be referring to. On a daily chart, each candle is a day. On the hourly chart, each candle is an hour, so on and so forth, 4 hours and all of that good stuff. This is the first drawing that I got. And this is basically just how the formation of a candle is, right? So obviously, normally bullish candles are green and bearish candles are red. A candle opens, a green candle opens at the bottom, and the buyers push up the price action, all the way up here. And then the sellers actually came back in and pushed the price all the way back down again. Now, that's what ends up forming these tails at the top and the bottom of candles. Those are called the wick. That's what I refer them to, at least. Some people call them the tails. That's going to be the high and the low of every single candle that you see. The wicks are always the highs and the lows of that session's candle. On a bullish candle, it opens up and we push the price action up, forming the body of the candle. And what ends up happening is when the price ends up closing higher, it forms a green or bullish candle, and the close is the upper limit of that candle. So you've got the bottom limit, which is the open, the upper limit, which is the close, and then the high and the low of that candle. So this makes up one session of trading action on the chart, whether that's a minute chart or a daily chart. The only difference between a green candle and a red candle is where the open and where the close is. So let's move on and go down to a little bit of more information about how these candles work, right? Like, let's talk about these wicks and the bodies of the candles. There's very little rejection when the wicks are really small, right? That means that there's a lot of buyers and sellers in control here, and you get a really big candle body. Now, a long wick means that there's a very strong rejection or very strong support in one way or the other. So this wick is coming to the bottom, right? That means that the sellers were trying to push it down, and there was so much buying pressure here that they just couldn't do it. The buyers bought all of it up, and it ended up closing higher. On the other side, if you see a really strong wick to the upside, that means that there was a lot of opportunity to buy. Buyers were coming into the market, but there was more sellers than buyers, and they pushed the price all the way back down past where it opened. When there's a big body, it means that, and a small wick, it means that there's very little rejection and that the buyers and sellers are in total control. And when there is a very long wick, it means that there was a very strong rejection to either the upside or the downside. Now let's take a look at these ones in the middle with a small wick and a small body, right? For this candle right here, that means that the price opened down here and the bulls pushed it up, the bears pushed it down, and the price pretty much closed in the exact same spot. This just represents indecision in the market. It means that both buyers and sellers are in total control, and there wasn't really too much movement that session because the buyers and sellers were pretty well matched. These are really important because a lot of these are going to signal opportunities to be buying or opportunities to be selling. I'm going to outline in this tutorial some of the major ones that are really, really important. So the first one is this bullish engulfing pattern, right? So we've got two sets of engulfing patterns. This one is bullish engulfing, right? We had a bearish candle, strong bearish candle, and then the next candle that we got was a very bullish candle, and it opened up where the previous candle closed and completely surpassed and closed higher than the open of the previous candle. So this is what a bullish engulfing candle formation looks like. It means that the buyers are in total control and it's showing a lot of bullish strength right here. It means that the buyers want to be able to push that price higher. Let's say the price was ticking up, you got a big, nice bullish candle here, and then bam, one of these candles happens and you get a really big bearish candle, wicks to the up and down side, and it closed below the open of the previous candle, right? That's called a bearish engulfing candle. That means that the sellers took total control of the market. Here is another one, which I'm sure that you guys have seen before. Seems to be a lot of confusion about these. I'm going to lay this out really, really easy for you. Now, there's dojis and then there's candles. Now, some of these dojis have different names, like these ones here, right? Dragonfly doji, gravestone doji. That's basically just denoting if the wick is to the downside or if it's to the upside, okay? That's really all of that is denoting. You normally don't want to enter into a trade on a doji. You want to wait until the close of the next candle. But anyway, a dragonfly doji, that means that the price opened here and the bears pushed this way down, but the buyers pushed it all the way back up and it closed in the exact same spot or about the same spot. That means that there was a very, very strong rejection of lower prices, and this could signal that a bullish reversal is coming towards the market. Now, the same thing pretty much can be said for a hammer, right? So this is what a hammer is. Price opened up here, and the bears were trying to push it down, push the price down. There was a lot of sellers, and the bulls just bought all of it up. And it ended up closing higher than the open, and it forms this kind of hammer. That means the same thing that this dragonfly does. There was just a little more price movement in here for the actual size of the candle body. There pretty much is no candle body. And if there is, it's extremely tiny. So these are basically just opposites of each other. So make sure that you keep in mind these candlestick formations, what they look like, what they signify. That is the most important thing when it comes to reading candlesticks and candlestick theory. You have to memorize what these candles look like and what the significance of their formation is in order to better enter the market with some other forms of confluence. So moving on, we've got another couple formations here, and these are called tweezers. This would be a bearish formation of a tweezer top, right? This means that you had 2 times the rejection of higher prices, right? So the price opened up here, it pushed way up, but it closed higher than it opened. Maybe you get a green candle here. These can be reversed, by the way. It doesn't really matter the order that these are in. What matters is the placement of the wicks. Are the wicks to the upside or are the wicks to the downside? But the reason why this is such a very strong reversal sign is the fact that you're not just getting a rejection of higher prices, you're getting it 2 sessions back to back. And this is a very strong bearish reversal sign or a very strong bullish reversal sign if you see these really long wicks back to back in 2 sessions to the bottom of the candle. This is just an introduction, quick intro to doing candlesticks, how to read them and how to spot them on the chart. It's extremely, extremely important. What does all of this stuff mean, right? Basically, they just make up the chart. That is what the price action translates to between all of the buyers and sellers. So all of that data that's coming in from the order book, buyers are getting matched up with sellers and vice versa. All of that stuff is what ends up making the candlesticks, right? These candlesticks, when you put a whole bunch of them together on the chart, that's what makes it possible to identify support and resistance zones. That's why support and resistance zones are so important to learn, because those are going to be the areas that you can identify on the chart that are very large areas of either supply or demand. As I mentioned before, you never want to trade based off of a candlestick alone. You definitely want to be able to use some confluence. All right, so before we move on to the chart, I just want to take a second to explain to you guys something that I am extremely, extremely excited about. So there is a coin called NWC. It stands for News Crypto. I want you to go to newscrypto.io. The link is down in the description below. Check these guys out. This is a project that I am super, super excited about. about. They're partnered up with Visa, MasterCard, PayPal. They're listed on the KuCoin exchange. I think they're also partnered up with GPay. And this coin I am predicting will go 10x probably within the next 2 or 3 months. I'm expecting this coin to rocket. For more information on that, check out the link to their website down in the description below. You can also check out the link to the full video where I go into NWC analysis in detail down in the description below. One other thing that I would like to mention is I will be doing a $100 giveaway. Yes, that is right, $100. If you like this video and subscribe to my channel, tag your Twitter handle in the description below with a money symbol after it. Once you do that, that is your entry. I am going to draw the winner in 2 weeks. I'll show you some love. Thank you for showing me love. Now, let's get back to the charts. Let's see, back in 2019, right? This is a tweezer bottom, and we got those 2 strong rejections from the bottom twice in a row. Boom, and we shot up. We got a bearish engulfing candle here, and then the price came back down further from where that support was. So the support broke. We made a new level of support here, right? See where all of these wicks are coming down? So if you draw a box here, you can see all of these wicks that are either coming into or bouncing off the top of this box, right? This is a new level of support that's been identified. Now, obviously, just looking at this here, you know, none of this price action would have happened yet. So you obviously wouldn't be able to draw it all the way over here. But once you tap this a second time and then, oh, look what we got here. What kind of candle is that? That's a reversal candle, right? Boom. And we shot up. Okay. Then we got a dragonfly doji up here. See? And what happened there? Well, right after that, boom, we got a humongous downtrend. And then that level of support that I previously had that was around here, well, guess what happened later on? That level of support broke down. This was another example of a tweezer top, right? So this was another reversal pattern. And we actually had 3 huge wicks to the top, but these were a lot closer together. So we had 2 candles back to back, wicks very strong to the upside that got pushed back. And sure enough, the price ended up slowly grinding down and finding a new bottom. We ended up having a huge bullish engulfing candle and the price ended up moving higher. So these are just some examples of what these candlestick patterns look like on the chart. Make sure that you study these, make sure that you pay attention to what these look like. And this is just the rundown. All right, guys, I hope that you enjoyed the tutorial today. I'm going to be doing a lot more educational content. That's why I really encourage you guys to make sure that you smash that like and subscribe button and make sure that you don't forget to enter in the contest for my $100 giveaway down in the description below. Make sure that you check out newscrypto.io and check out the project. It's something I'm really excited about. The link to the full analysis is going to be on the end screen right after this. That's all for today, guys. I hope you have a wonderful day, and until next time, I'm Cobra Trading.